Welcome. We will begin shortly. I'm Rashana Levin with Keller Williams Realty. Thank you for tuning in to Buy a Home with a USDA Loan. Today's agenda, I'll discuss a little bit about me, what is USDA, program basics, loan limits, mortgage insurance, borrower eligibility, locations based in Virginia and the Maryland area that I've found, and closing costs and appraisals. So let's get started. So I have been in real estate for a little over 15 years in Virginia, Maryland, and DC. I'm also a notary public and e-notary in Virginia. So if you need a notary, I can assist with that as well. I pride myself on learning programs that will assist my clients because it's important to know all of your options available so you can make an educated decision. After all, this is the biggest purchase of your life. So, what is USDA? So, USDA is the United States Department of Agriculture. They offer 2 loan programs for qualified buyers to purchase in eligible rural areas. The first program is USDA Guaranteed Loan. This loan program is for low to moderate borrowers with income levels up to 115% of the median area, and it is issued by a USDA-approved lender. The second program is a USDA Direct Loan. This loan program is for low to very low income borrowers with payment assistance towards the mortgage and is issued and processed by USDA. With that second program, you have the ability to, if you qualify, to get a 38-year loan. That's right, I said 38 years. It's possible. And with the guaranteed loan, you can finance up to 33 years. So, program basics. The program offers 100% financing. The program must be located in an eligible area based on the USDA map. The borrower must be able to afford the loan. The property can be resale on the market or it can be new construction. The borrower is able to get a low fixed interest rate. Adjustable rate loans are not allowed with USDA. So, loan limits. The loan limits are going to be based on the county in which the property is purchased and the borrower's qualification. So there is a set limit, but it's a lot of factors that go into that because it's going to be based on, it's income restricted, so that is going to put a cap on basically how much you can purchase unless you're putting down a significant amount on top of that, even though the program is 100% financing. So, mortgage insurance. There is an upfront mortgage fee of 1% of the loan amount and a monthly fee of 0.35% of the loan amount. Compared to an FHA loan, there is a 1.75% upfront fee based on the loan amount and a 0.85% monthly insurance amount. So it's cheaper to finance a USDA loan rather than with an FHA loan if you're buying a property in that eligible area. So as long as you qualify, USDA is probably the better option because it's cheaper. Your mortgage payment will be cheaper rather than using FHA. The upfront cost is the cost at closing, and the monthly amount is what is paid with your mortgage payment on a monthly basis. So borrower eligibility. At least a 620 credit score. Some lenders will allow the borrower to have credit scores as low as 580, though this is going to be on a case-by-case basis. There are income restrictions based on the program type that you're looking for. Something to keep in mind about income, how income is counted. All members living in the household will be counted. So if your mom is living there, then her income has to be counted. If your dad's living there, that has to be counted. If you have kids and they're working, income has to be counted. So that could also basically bump you out of the program, because if you're at the income threshold and then their income has to be counted, then that could potentially make you unqualified for the program. So the program is not limited to only first-time home buyers, which is great. Repeat buyers can also use the program, though you cannot have this property has to be your primary residence, which means you have to sell. If you own a house, you will have to sell it before you can use the program. So debt to income ratio is limited to 29% of your gross income for the housing cost, which is your total monthly mortgage, including your principal, interest, taxes, and insurance, and the guaranteed fee, which is the mortgage insurance that's on the loan, in addition to any HOA or condo fees. And for the 41%, which is what they call the back-end ratio, that is for your monthly expenses such as your car, student loans, and credit card payments added with the total housing costs. So all those things together cannot be over 41%. Though there are some lenders that will allow you to stretch that, but there are going to be compensating factors that will allow for that. And also, talking about qualification while we're talking about student loans, is USDA is the only loan program that will allow you to count 0.5% instead of 1% of the loan balance as a payment amount used, which is a good thing, which means you qualify for more house. So if you're a self-employed borrower, that is allowed, and the property must be your primary residence. So property eligibility. So you can purchase a condo, a townhome, or a single family as long as the property is located in an eligible area based on the USDA map, and you qualify for the payment based on the sales price, taxes, and insurance, etc. Though no multi-unit purchases are allowed with the USDA loan. For more information about USDA loans and other resources, go to my website at rashawnalevin.com/USDA. So next, let's talk about locations. So what locations can you use in the DC, Maryland, and Virginia area? So, of course, DC is a city and it's not rural, so we know DC won't work. So, but I found a few cities, though there could be other locations as well that are not on this list. But these are some that I found that I was really surprised that USDA you can use them. Though you still gotta pull up the address, but these are some locations to consider. So Aldi, that's in Virginia. Akakie, that's in Maryland. Bellingham is in Virginia. Brandywine, that's in Maryland. Bryan's Road is in Maryland. California is in Maryland. Chesapeake Beach is in Maryland. Culpeper is in Virginia. Frederick, that is in Maryland. Fredericksburg, that is in Virginia. Front Royal is in Virginia. Gainesville is in Virginia. Haymarket is in Virginia. Hughesville is in Maryland. Indian Head is in Maryland. King George is in Virginia. La Plata is in Maryland. Lexington Park is in Maryland. Manassas is in Virginia. Knoxville is in Virginia. North Beach is in Maryland. Poolsville is in Maryland. Round Hill is in Virginia. Ruther Glen is in Virginia. Spotsylvania is in Virginia. Stafford is in Virginia. Sterling is in Virginia. Upper Marlboro is in Virginia. Waldorf is in Virginia. Warrenton is in Virginia. And there could be countless of other areas, but these are the areas that I would probably say that have the most that I could think that primarily where others would want to reside, and there are actually properties there. So, but there could be more, but of course not all of these cities are full disclosure. So not saying all of Aldi is open to the rural development loan. You have to still pull up every address because it could be just a small section of the city that qualifies. So like, for example, only part of Upper Marlboro is like a small, like little corner that is available. So you have to pull up every address to just make sure that it qualifies. So finally, let's discuss closing costs and appraisals. So on average, closing costs is 3% of the loan amount. A great benefit of using a USDA loan is if the appraised value is higher than the sales price, then you can use the difference towards your closing costs. With a USDA loan, the loan amount is going to be based on your appraisal amount and not the sales price. So let's take this example. If you purchased a home at $250 and the appraisal came in at $260,000, you could use the $10,000 towards your closing costs and any small repairs that were needed to the home, any small renovations. So that's possible. It's just one of the great benefits of using a USDA loan. Thank you so much for watching my quick video on a USDA loan. Make sure that you like, comment, and subscribe to my channel. I'm Rashana Levin with Keller Williams Realty. Thank you for watching.